Retail interest is rising and the charts clearly show it. So is it time for a parabolic increase in Bitcoin's value before the theoretical end of the cycle? Let's get started. Hey there, welcome to another episode of Crypto Market Analysis, where, as you already know, we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. We meet here, and as you know, we take a look at the charts from three different perspectives: technical, on-chain, and fire charts. And as a result, you won't find such condensed knowledge as we serve here anywhere else on the internet. Thank you for appreciating this, because the number of our subscriptions is really skyrocketing, and right now we're aiming for 60,000 on the channel. But I also know that many people who watch these videos aren't actually subscribed to the channel, so this is the perfect moment to hit subscribe, or at least ring the bell, give a thumbs up, leave a comment, anything. And also remember that the content in this video absolutely does not constitute investment advice. For advice, please consult a licensed advisor or do what I do. Conduct your own research. If you acknowledge this, grab your coffee and let's get started with the analysis. Uncertainty is a state that few of us like, and market analysts also experience uncertainty, especially when looking at charts that don't send clear signals. And that's basically what we can say we're seeing right now on the Bitcoin chart, at least theoretically, because I think we can actually read some signals here, ones that might indicate which direction the market is heading. So let's take a look at the chart and first go over what has happened over the past 2 weeks. In our recent videos, we mentioned that the 9th bullish candle of the TD sequential indicator, which appeared here at the all-time high, could indicate that Bitcoin is reversing and that we won't see another breakout to a new all-time high here. There were actually more reversal factors in this case, but let's say we stick with this 9 here because it's the most reliable. And as we can see, a decline followed. The decline ended with the 8th consecutive bearish candle according to the TD sequential indicator, and everything would have been great if the 9th one had lit up for us the next day. That's how it was in theory. But last Friday, we saw a very strong increase in Bitcoin, almost 4%, which caused that 9th candle, which was about to light up here, to go out. This unfortunately resulted in the continuation of the downward trend, a downward trend that initially reached the level of 12,000, then 110,000, and even deeper. Well, as we mentioned in previous materials, 110,000 is the area we considered as the third support level, and as it turns out, it has indeed been reached. And while Bitcoin can still go a bit lower, how low can Bitcoin fall? I see here 3 main support zones. The first of them is around 107,700, which are the lows that were marked here. The next support, let me move the chart so we can see it better, is 105,000, which is the low that was here. And those lows that were here, meaning the area around $100 to $101,000, can Bitcoin really drop that low in the short term? I don't think so. There are many indications that right now, at this point where Bitcoin is, a certain kind of rebound is already happening, which could be an upward rebound. Why? Well, first of all, $110,000 is a test of these very peaks that we talked about in previous videos, these two right here. Besides that, we're seeing a certain trend repeat itself, one that has already appeared in this bull market, where Bitcoin very often dropped during its consolidation below the peaks that had been reached earlier, which theoretically were supposed to act as support. It would draw liquidity and then move higher. It's very possible that we're seeing a very similar pattern here. Of course, based on technical analysis, we can't say with 100% certainty, but fire charts are sending us certain signals, which we'll be discussing in a moment. Nevertheless, it's worth paying attention to where Bitcoin might be heading. And here, maybe let's also take a look at the RSI. The RSI, which, by the way, has recently been sending signals ahead of what actually happens with the price. And for example, last Friday, we saw the RSI hit the 50 level. And unfortunately, from that 50 level, it bounced back down and the declines deepened. On the RSI, we can also see support along this line I'm showing now, this horizontal line. It shows that we've had bounces here once, twice, 3, 4, 5 times, basically from the same level, around 38 at this point on the RSI. But watch out, this is still a downward trend after bouncing off the 50 line, and we don't see any bullish divergence here. If there is no bullish divergence, we also can't be sure that the trend might be changing at this point. It could simply continue to rise. For me, horizontal support levels on the RSI are not enough. It's just not enough. It's worth taking them into account because they can indeed indicate a breakout if they're coordinated with other factors, but in this case, it's still not enough. Right now, the chart structure is more important. The structure tells us that the 112,000 that was lost here needs to be regained for Bitcoin to be able to break out a bit higher. Where could it break out to? And here, it's worth bringing up the moving averages at this point. The moving averages have caught up with the price because this breakout has resulted in consolidation. This consolidation has been going on for quite some time, so naturally the moving averages are catching up with us. And while the 200 period moving average doesn't matter much here, let's just turn it off so it doesn't add any extra. Oh, I'm not able to turn it off right now. Oh well. But let's stick with what's most important, which is the 100 period moving average that we're observing here. It's this yellow line below which the price has theoretically dipped. But wait, I've mentioned the 100 period moving average many times on Kanga Trends, and I've repeatedly emphasized that Bitcoin tends to find support around it. Even though there was a breakout below its value here, this is still a natural behavior. I see a chance for a rebound precisely from these regions. It's testing the 12,000 level from above and then Bitcoin moving even higher again. What value could Bitcoin be heading towards in the short term? In my opinion, a quite logical value is the 50-52 moving average, which is currently hovering around $116,600, which is also the peak that is marked here. So here we have a double resistance, and this resistance may be tested. Well, to me, the situation seems fairly clear in the short term. I would rather expect consolidation here and simply a slight minor breakout to the upside in order to maintain the current chart structure and allow this consolidation to continue. This in turn would allow for a breakout to occur at a later time. Why will there be a breakout? Why am I expecting it? Let me remind you once again about the hash ribbons indicator, which lit up for us at the value of $120,000, marking the 19th time in Bitcoin's history that it has done so, and every single time in its history it has signaled upcoming growth. The hash ribbons indicator, every time the price moved downward after it lit up, actually only signaled buying opportunities. So in my opinion, these are still buying opportunities because so far this indicator has remained reliable. The title of this episode is about retail investors entering the market. And attention, there are factors emerging that really confirm this quite well. The most interesting ones will be in the on-chain analysis, but right now there's also one that tells us a lot. Let's take a look at the CVD on fire charts. That's exactly where we'll start today's analysis of what's happening in the order books. And we see a lot of different lines. There's a certain orange line that I often talk about, which indicates that these are simply the smallest wallets that are currently buying Bitcoin. The smallest meaning those that have a balance between $100 and $1,000. And for a long time, I've been pointing out, whether here or on my Twitter, that these wallets have consistently been in an upward trend and are eager to buy Bitcoin. This is also strongly reflected in the aforementioned on-chain data. Additionally, it's truly worth noting here that currently, the significant whales are also actively involved in the current price action. They had somewhat withdrawn from the market a little over 2 days ago, let's say, but now they are indeed rejoining the market and are gently yet consistently buying at the current price levels. This continued involvement from large holders is a key factor to consider. It's worth noting that for about 48 hours now, just below the current price, which is marked by our blue line here on the chart, there are these buying clusters, the lighter horizontal lines, which indicate that the number of buy orders in these areas is increasing. Well, we saw such buying clusters at the level of $110,000, and indeed Bitcoin dropped below that $110,000 mark. But despite everything, we can see that because of this drop basically caused a lot more buy orders to start appearing here, and they are being spread out more and more widely. If we're looking for resistance, then it's worth paying attention to the level of $116,000 in this case, just under $116,000. And attention, it confirms what we observed on the technical chart, because right around this area is where the 50-day moving average is located. So if there is a breakout above this level, I would see a stronger resistance here. However, while recording this material, I can see that the value of $111,500 has lit up for us, where the number of sell orders is also increasing at this moment, but we'll see if they will be observed. So we can see that what is happening on the technical chart is being confirmed for us on fire charts as well. However, in this case, it's actually fire charts that are sending clearer signals than technical analysis itself. I read your comments and I see that you would like to have a bit more technical analysis on the Kanga channel. There is a solution for this because theoretically at this point, Kanga is not planning to release more Kanga Trends episodes per week, but I constantly share my analyses on my Twitter. So if you want to have access, follow me on Twitter. Not only to keep up with the current analysis that I share basically day by day, but also for the critical deviation indicators and the leverage, which I very eagerly use on Kanga. And for example, I talked about leverage in yesterday's tweet, where I mentioned that I'm longing Bitcoin from the value of $110,000. I mentioned what leverage I'm starting with here, where my liquidation point is, and exactly what I'm observing on the chart. So if you want to have insight into what I'm doing on Kanga futures, I encourage you to simply follow along. Ethereum is reaching new all-time highs, but watch out. It's also sending a series of signals that could cause concern. And basically, I also mentioned on my Twitter that in recent weeks, ETH has been consistently building a very strong bearish divergence. We can see here the price bars moving upward here and here, while the RSI is clearly dropping down. On the RSI, we can mark this very clearly, and we see a downward trend here. Well, this is basically a triple divergence at this point. But watch out, this isn't a typical divergence, because here we're talking more about a momentum discrepancy, as this divergence extends over a bit more than 14 days. Nevertheless, we can see that there is a continuation here. In this case, there were actually many factors supporting the bearish scenario. Among other things, the fact that Ethereum simply broke a new all-time high, which meant that everyone who held Ethereum in their portfolios was in profit. So naturally, this just results in increased selling pressure. And naturally, we are seeing declines as a result. These declines can lead to consolidation. Why? Because, for example, we can see on the RSI that it keeps dropping here, but it's falling to the safe level of 50. However, it stayed in this bullish zone for a very long time, which could mean that the 50 level, watch out, might be broken. That scenario wouldn't surprise me at all, especially since ETH could still drop to $4,000 and test that value as support. If the RSI loses contact with the 50 level while the price remains above $4,000, let's say around 4,200 or 300 in that region, then I would expect the RSI to deepen its decline, and as a result, the price of Ethereum would also drop to around 4,000. Here, consolidation, and this kind of bouncing between 4,000 and around 5,000 is, in my opinion, completely justified. So despite everything, I still see that the demand for Ethereum is very, very strong. But there are certain factors indicating that this upward movement we see here, which has been a very dynamic upward trend for quite some time, needs to cool off. And the RSI, for example, also needs to fully reset so that further divergences do not occur when new increases appear. Because if they keep appearing, then those subsequent breakouts will also be very, very weak. On the 5 charts chart for Ethereum, we actually see more selling pressure than buying pressure at the moment, but this is the kind of chart that doesn't really tell us much right now. But besides that, it's worth paying attention to the CVD. And here, in fact, we get more information. First of all, we can see that currently, whales are the most interested in trading Ethereum. That's our brown line, and besides them, the second largest wallets, the purple ones here, which hold between $100,000 and $1 million in their balance, are also buying Ethereum. But even so, we can see that these wallets, despite such local upward trends, are moving in a very balanced way. So they participate in the market, but after a while they pull out, only to enter again later. So here too, in the case of Ethereum, uncertainty appears. And such uncertainty, in the case of the chart structure we just mentioned, that is the range between $4,000 and $5,000, tells us that consolidation is actually the most likely scenario. The altcoin we're putting under the microscope today is Chainlink, which has made astronomical gains since the last time we talked about it. And in fact, the first time we discussed Chainlink, it was valued at around $12, pointing out that it had the potential to break out. And attention, Chainlink did break out, tripling its value because it soared from $12 to over $26. So what happened along the way? Well, we can see the TD sequential, which sometimes signaled certain corrections for us. And we also notice that Chainlink's behavior is very similar to what's happening on the Ethereum chart. Why? Because here we are dealing with an upward trend in the price and a downward trend, which is very clearly drawn in this case on the RSI. This in turn means that Chainlink may encounter more resistance, and it's very likely that it will need to consolidate for a while. If it needs to consolidate, to what values might that be? Let's check if the moving averages can tell us anything. And we can immediately see that the 50-day moving average at this moment aligns exactly with the peak we observed here just a few weeks ago. So declines to these values are entirely justified. Although to reach that value on the moving average, the declines would have to happen very rapidly, and in this case, for this cryptocurrency, I don't expect that. However, it's worth keeping an eye on the 50-day moving average in the future because its value will continue to rise, and what does that mean? That the potential rebound point for Chainlink as well. This is its support, which in my opinion will be the first support, and it could soon be around $21. If we see a convergence of this bottom with the 50-day moving average here, for me, that will be a good moment to buy. If this gets broken, then only the area around $19 to $20 will be the second support. And if Chainlink rebounds, I would expect an increase to around $26 or $27. That is to the values we have here. And here I would be watching the RSI. If the market stabilizes and does not experience any significant major divergences later on in the foreseeable future, we could potentially see Chainlink rise even to these peak values here. That is to say, around $30, which would represent a substantial gain. For now, however, I'm still being cautious with Chainlink and will be watching the 50 level on the RSI because it's quite possible that there will be one more dip and then a rebound. If that coincides with the factors I mentioned earlier, for me that will be a very solid support. And of course, the continuation of the upward trend and Chainlink on fire charts basically confirms the resistance levels we just observed. That is $26 and above. These are essentially the sell clusters that we see here, which reflect what we just discussed on the technical chart. Also, the RSI and the divergence occurring there are constantly being monitored by traders who are placing sell orders precisely in these regions. Besides that, it's worth looking for support in case of potential turbulence. The first such support appears around $22.45. And we can see that this basically coincides with the lows that were marked right here. So here we have the first support levels. For now, the next ones are not yet clearly defined on fire charts. So who is buying Chainlink? And here we also see retail investors. Again, the orange line, which is in an upward trend, and we can see that this upward trend has been ongoing for a very long time. Just like with Bitcoin, where we've been seeing this trend for a good 2 or 3 weeks now. In addition, the purple line, which basically represents the second largest wallets, those holding between $100,000 and $1 million, are also buying Chainlink very heavily at this moment. So for now, the CVD looks promising, but when it comes to technical aspects and fire charts, they themselves are still sending somewhat cautious signals. If you would at least like to see your altcoin, remember that it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. You can check out the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, once again, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any memcoin. So you know what to do. Check out what we have and let me know. Even though retail investors are entering the market, it's the ETFs that reflect what's happening with the price. And basically, as long as ETFs aren't buying aggressively, the price isn't rising aggressively either. And we can see this right in front of us on this chart, where the last few weeks are a very clear consolidation, where we see some sell-offs, those are our red volume bars, and purchases, which are the green volume bars. They are clearly lower than those we observed even just a month ago, or basically over the previous 2 months. And this may simply indicate, as I mentioned, that a consolidation is taking place. The last 2 days have seen purchases, which is positive, but they are not particularly high, so uncertainty is also being observed in ETFs. So let's move on to the connections, and today we have a new indicator, the CBBI index. It's quite an interesting indicator, which is a critical deviation indicator, one of many, but it's unique in that it presents a combination of several different indicators, creating a single resultant value. And it's a combination of exactly 9 indicators, which include, among others, Bitcoin price trends, MVRV ratio, hold ratio, NUPL, and reserve risk. So really solid indicators that have repeatedly identified maximum critical deviations, in this case for Bitcoin. And it's worth noting that on this indicator, we've seen very regularly that when Bitcoin reached a value of 95 and above, it basically hit the bull market peak in a very short time and then automatically pulled back from that peak. Nevertheless, during the current bull market, these peaks are being reached at levels above 80. These are new all-time highs, which are then followed by consolidation. We don't see very strong breakouts that would indicate that values of 95 and above will be reached this time as well. Bitcoin is oscillating on this indicator around 77, which is quite high, and this may still confirm that a certain type of consolidation could occur here. But a trained eye, especially one experienced in technical analysis, will definitely notice on this indicator that we have a kind of ascending triangle here, that the lows we observe on this indicator, the green ones, are moving upward, while at the same time we see a very clear resistance here. Specifically, this resistance is set at the 80+ level, and situations like this very, very often signal a breakout to the upside. So if Bitcoin takes off here and actually breaks through 80, it could really soar toward 95. But one indicator, even though it's made up of many others, is still not enough. So on Kanga Trends or on my own Twitter, I will definitely be comparing many different indicators, those that point to critical deviations, those that tell us whether we might actually be reaching the end of the bull market or not, because it's precisely information from multiple indicators that can provide us with reliable data. We never base our analysis on just one indicator. What's the deal with these retail investors? Are they really entering the market? To determine that, let's take a look at different wallets with varying Bitcoin balances. Starting, of course, with retail wallets, meaning those that hold any amount of Satoshi. In front of us, we have a chart that illustrates exactly that. Here, the orange line represents the indicator, while the gray line shows the price of Bitcoin, and we can see that the orange line has basically started to rise since the end of July, and almost every day has been reaching new all-time highs. This aligns very nicely with what we observed on fire charts through the CVD, where the orange line has also been rising continuously over the past few weeks, indicating that retail investors are currently buying and are the most active participants in the market. We can see very clearly that this line is rising, and for now, it may be cooling off slightly, but there are no signs that it might actually reverse anywhere at this point. So from this perspective, these wallets look very positive, and we know that yes, retail investors are in the market and entering, slowly but surely. Besides that, let's check what's happening with the other wallets. Now let's take a look at those that hold 1 Bitcoin or more, and here we see a flattening. There's basically nothing to talk about. Wallets holding 1,000 Bitcoins or more show the same pattern, exactly the same flattening and consolidation over a longer period of time. Besides that, let's also take a look at wallets holding 10,000 Bitcoins or more. And notice here we have a drastic drop, because in this case, these wallets reach a value of 84, and that's a decline in quite a short period of time, since basically mid-July, from a level of 95, meaning 11 whales have left the market. As you undoubtedly know, if you follow the latest market news, if you watch, for example, the insightful program A Quarter with Kanga, you know that a significant number of previously dormant wallets have recently become quite active. Well, that often indicates that a sell-off is simply underway. Is this sell-off actually being carried out by dumping coins basically onto retail investors? That isn't entirely clear. I always keep the hash ribbons indicator in mind, which tells me that regardless of what's currently happening on on-chain indicators, a breakout can still occur. So for now, I don't see any alarming signals in this case. Demand above all is very high, and we can see this in the price, which remains at very high levels, where Bitcoin, having reached its all-time high around $124,000, is now hovering around 110 or just above. So despite these very drastic sell-offs, the Bitcoin market continues to absorb them. Then there's also the Bitcoin balance on exchanges, and here in the long term we see a very strong downward trend, which is a very positive factor. But at the same time, we are observing an upward trend that is occurring. Attention! Since mid-July, or actually since the beginning of July, we can see a certain coordination between what's happening with the balance and what's happening in whale wallets. And as long as there isn't a reversal here, which could happen even before the price of Bitcoin rises, we shouldn't expect any radical increases. So in this case, consolidation in Bitcoin is much more likely at the moment, at least until these sell-offs we're observing here, these increases, come to a halt. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it could be Bitcoin, it could be Ethereum, or it could be Chainlink. Present a technical, on-chain, fire charts, sentiment, or fundamental perspective, whatever you like. And remember, you absolutely don't have to agree with me. The author of the comment posted by Friday at midnight that I find the most interesting will receive 20 KNG from me. And the winner for the previous episode is Martin P6W3Q, who analyzed ETH. Congratulations, Martin. I kindly ask you now to contact support to claim your prize. That's all for today. If you enjoyed it, and I truly believe you did, and this is your first time here, remember to subscribe. If anything in this analysis was too complicated for you, also remember about Kanga University, where we have a technical analysis course linked in the comments, or rather in the description of this video. And please rate this episode on a scale from 1 to 459, where 1 means it's weak, bland, and you don't want to see me here again. 459, fantastic, and you want more of this. And if you do want more, then you know we'll see each other again in 7 days. Thank you so much for joining us today. It has been an absolute pleasure having you here, and we truly appreciate your time and attention. We hope you found this session informative and enjoyable. We look forward to the possibility of seeing you again very soon in our next broadcast or event. Until then, please take care.